tens, maybe hundreds, maybe much more of hours of very intelligent people have been put together to come up with what I will show you now with this. And what is this? This is the new white paper that we will be talking about today. And it's supposed to be something very interesting. Now, over the past few days, we received few questions from team members, members of the community, people who engaged with us and looked at it. And some of them are very interesting. But while preparing for this, Dennis and myself decided to take this and throw it onto the ChatGPT and ask ChatGPT. Look at Dennis smiling about that. Ask ChatGPT, give us interesting questions about this white paper. We will use none of them today because actually you need a course to understand, not you, me. I need a course to understand the questions rather than the answers. So this session will be explaining the questions to Makram, and then next session will be, let's try to answer the questions. So we decided to drop them. We decided to take some of the community and team questions, simplify them, making as simple as some that I understand, and answer them. So today, Denis Petrovcic and Makram Hani on a block chat, answering some very simple questions in a very complex manner. Dennis, how are you?
Hey Makram, I'm a bit scared about this block chat. So we've done the release of the white paper last week, and what we've also done is something that we haven't done before. We used AI to generate a podcast, and that podcast has been as well published. And now the challenge that the two of us have is to be better than the AI generated podcast, and I'm
Look, to
worried
be better,
that
I
we
should
won't be.
first not show my face. Yeah, to be better, I should not show my face and try not to talk. So on you go. Go ahead, please.
No, come back. I'll need help. Come back. Don't hide behind the scene. No, definitely quite exciting. This is something that we've been working since 2022. And it's something that needs time, right? If we would be, a large real estate company, then we would be able to approach this in a different way. But because we're approaching this from a Web3 startup perspective, you need to acquire the market first. And we had to build up the momentum around Oceanpoint, the understanding of asset owners. So building up a decentralized liquidity engine is definitely not easy. But I believe that we are on the right track, and that then this white paper will definitely kind of summarize everything it does summarize everything that we have achieved so far, and how we are going to build up Oceanpoint into the liquidity engine. There's a phased release schedule that's clearly kind of outlined in the white paper. There's the definitions of the various pools that we've introduced since the launch of the white paper. There's a lot of information that our community is already familiar with, but there's a big chunk of the white paper that's completely new. It's been quite a big challenge putting everything together. There's still some challenges, how we will overcome certain technical not issues, but technical, challenges. The good part is that the smart contract for phase 1 and 2 is already developed as we speak. It's finalized, so it's now in the process of internal auditing, which means ensure that our team is kind of going through it, looking at it, at the code, sleeping over it, and then once we feel comfortable, we'll send it for final auditing by Hakan, which is our auditing partner.
The best part about it, guys, is that it's very easy. We've done all of this very easy. Says the man who got involved in none of it and understands very little of it. The last I've seen this was under a tree in Ljubljana in Old Town, fighting with Daniel and Dennis. When was it? 3 years ago? 2 years ago? Yeah,
2 years
and
ago, I think. Yeah.
2 years ago, and that was the last I've seen I've seen of this. So I understand this much less than you guys. So the questions that I will ask today hopefully will answer, or the answers to the questions I will ask hopefully will answer the questions of the majority. So Dennis, what is it all about? What is this fuss all about?
So it's all about liquidity in the end, and liquidity of tokenized real estate. You as a user or anybody who, if you want to see the world adopting people buying into tokens of real estate assets, they need to be able to liquidate them very easily. And Oceanpoint is there to assist the buying and selling of tokens, of real estate tokens. That's the main
So is it
functionality of
activating the
Oceanpoint.
market, activating the
It's
market in a way or another, creating
exactly.
liquidity where liquidity doesn't exist, filling the gaps between demand and supply? Is that something possible? Um, yeah, all of those. Now, for those who know real estate or who lived real estate, we always know that there's always a gap. Yeah, there's a gap, and in what brokers have in touch with the real estate buyers, sellers.
Yeah.
Usually, there's a gap between what the buyer wants to pay and what the sellers want to sell at. There's a gap between the demand and supply. Sometimes there's demand for supply that isn't there. Sometimes there's supply for demand that isn't there. So is it bridging all of that? And how would we plan to bridge it? Or what did we add to it today? Because we've done many over the past few years that hopefully do contribute to that and are contributing to that. But what are we doing new now that does contribute to creating that liquidity and bridging that gap between demand and supply and other entities of the market?
There's this like whoever's going to read the white paper, you'll find there's a page discussing liquidity or illiquidity in real estate, a small section of it, but that's kind of the core part to understand Oceanpoint and point tokens, why they are there. And we'll come to point tokens, I guess, in some questions further on. But essentially, on the liquidity spectrum, you have on one side you have real estate, and on the other side you have fiat, right? And with tokenization, we're trying to fill the gap between the two. And fiat is very liquid, real estate is illiquid. Now, what we've introduced on one side is BSPTs, which is real estate, but in token form. And then what was introduced on the other side is stablecoins, which is fiat, but in token form. But there's still a gap between the two. And that's what we figured out through, basically operating marketplaces and assisting other companies operate marketplaces. There's a gap between those two forms, between a stablecoin and a BSPT token. Obviously, the swap can happen, but there's no engine that kind of functions in between as a market maker. And here's where Oceanpoint then comes into play. And what we've done is introduce point tokens, which are essentially aggregating the value of, on one side, BSPT tokens, and on the other side, stablecoins. And they're putting them together and mixing them together into a single protocol.
We call that organic market making in a certain way because I'm, for example, against artificial bot market making in real estate. I believe real estate is an element of security to societies and to the world. And I know that everyone is so funked with AI now and saying that we should have AI and AI driven machines that are trading real estate tokens and market making there. I don't believe so. I believe it should stay organic. It's humans who should buy real estate, no one else. How is Point contributing to that? And how is it, in a way or other, organic market making rather than artificial market making, which, in my opinion, harms communities, harms real estate, and harms the industry, tokenization or tokenized real estate?
So you can think of it as Oceanpoint is this protocol that can own any amount of real estate assets. It can grow literally in infinite. And to compensate for anybody selling their BSPTs to the protocol, it pays out point tokens. So it mints point tokens. On the other end, whenever you want to buy real estate tokens of a property, and maybe those tokens, there's nobody selling them, but Oceanpoint holds them. You can buy them from the protocol, which means you will need to serve the protocol point tokens, and these point tokens get burned. So it's kind of a token that it's a value aggregator, and it's always available, right? The protocol always has it, and it's always able to accept it. So there's always this redeemability one-to-one. So essentially, it's market-driven. It's not protocol. It's not like the protocol drives the acquisition of BSPTs and the sale of BSPTs. It's actually everybody who knows how Web3 works know that transactions need to be triggered by either a human being or a bot, of course, right? But it's a buyer and a seller that kind of triggers the transaction. And here, basically, the same happens. And the beauty of it is that we can do this in a seamless way behind the marketplaces that users use. They will not even feel who they're transacting with, really. Is it the Oceanpoint protocol, or is it transacting directly with another human being? Yeah.
Linked one-to-one in a way or other. One, there's no artificial blowing up of a certain market or a certain token. One, two, the ability of us to look at Oceanpoint protocol as a market player. Again, it's not artificially buying and selling to heat up the market, the other way around. It's serving as the side that is missing from the market at the time that it's missing. So it's covering that gap. Yeah. How does this service real estate tokenization as an industry, in your opinion? So, for example, when we looked at tokenized real estate, we said that there's many elements from democratization to liquidity premium that do add as characteristics to democratized tokenized real estate. Yeah. So it holds the characteristics of real estate plus added characteristics that it acquires from the new method of, or the new state it's in, which is fractionalized and digitized and on chain. How does utilizing points token add to that whole ecosystem, and how does it blend with our strategy to the future, where we're going with real estate?
Well, essentially, it's actually serving tokenized real estate, right? But because it's serving tokenized real estate, it's as well serving real estate as a market, because tokenization is there to serve real estate as a market, while you need to have tools in place that serve the tokenization market itself. So if now you have, because we have AML regulation, you can't go around it, right? So every user needs to be KYC. The responsibility of KYC is imposed on the marketplace operator. So you can't, one marketplace operator can't allow a user, after KYCing them, to transact on every marketplace around. That needs to be done by each individual marketplace operator. So this creates the segregated places where it's hard to transact because you're limited to a specific amount of liquidity. Now you can see Oceanpoint as a liquidity engine for all these marketplaces around. So if you go back to the real estate market and say, how does this serve me as a property owner? It serves you in a way that before, let's say you had to wait for the market to absorb your supply. Now some of the supply can be absorbed by the market and some of the supply can be absorbed by the protocol. So it gives you an additional liquidity option, which then obviously enhances the liquidity for users that buy these property tokens as well, which means it facilitates transaction flow. And by doing so, it basically then, in the end, the benefit is you can turn any property and essentially upload it and liquidate a portion of it online, which is kind of the aim that Blocksquare had since the beginning.
So let me understand this right. A property has been tokenized, exists today on a marketplace. How would point tokens and Oceanpoint protocol interact with it? And when will it interact, and why will it interact?
Point tokens is this liquidity aggregator in a way. Its value is tied to always be reversible for $1 of property tokens. So if I hold 1,000 tokens and the valuation of the property is 1 million, then by our standard, we know that those 1,000 tokens are worth $10,000, which means I can always sell those 1,000 BSPT tokens to Oceanpoint and I receive 10,000 points back. Now, the interesting part is that the point tokens will have liquidity on Uniswap and similar protocols. It means that these liquidity pools will enable the swap of point tokens for another crypto asset. That other crypto asset can be BST, it can be a stable coin, it can be ETH, it can be wrapped Bitcoin if you want. Now, this creates different routes for people to go from BSPT to stablecoins and vice versa.
So here, it's very interesting. Yeah. Sorry, did you want to say something else? Because you froze for a second. That's why I jumped in.
Yeah, I was just asking if this kind of answered the question.
Yeah, it does answer, but here is a follow-up question. So we have point token. You're able to exchange a point token to the BSPT based on a value of a point token is worth $1 of BSPT at all times. Now, and what you've mentioned is that you can take this asset, exchange it with point tokens that can, on its own, again, depending on the liquidity that is provided in such pools on platforms, it can be exchanged into other assets, which are other crypto assets, as you mentioned, or maybe stable coins afterwards, or even as a beginning. So that process is utilized to aggregate liquidity and to make a property token more liquid. Yeah. One is that prompted, and who needs to take the decision? So, is it that a property token owner, a BSPT holder, decides to sell 10,000 BSPTs to Oceanpoint protocol, and then at that point, when they're doing the exchange, Oceanpoint protocol issues that number of tokens to that BSPT holder, and by essence, the BSPT holder have sold the BSPT against those points. And then those points can be exchanged afterwards to stable coins, other assets, again, depending on the liquidity availability in the market. Is that to be done? Go ahead, please.
Yes and no. So that's the kind of the route. But obviously, what you want to do is you want to seamlessly kind of abstract away from the user that process, because otherwise it's tedious. The user doesn't care about the engine, how it works. You just want to sit in the car and drive yourself from A to B. So here it's kind of the same approach. You don't care about the engine, how it actually works, what kind of parts are required for the engine to work and for the car to exist. Here, basically, the whole transaction is routed through the OPR engine, which is the Oceanpoint router, and the router basically then looks at different swap routes and determines which route is the best. It's kind of a similar thing that it's quite a complex thing, but it's a similar thing that you see on aggregators in DeFi, like 1inch or Uniswap as well has routing functionalities and so forth, so that it gives you the best price possible. And that's going to be determined obviously with the payout currency. Like if you decide to receive payment in points, then that's the easiest route because it's direct. There's no loss. But if you decide to receive, I don't know, USDT, the routing will probably be done where Oceanpoint takes in BSPT tokens. It mints point tokens equivalent out. Then the router sends these tokens to Uniswap. It swaps them through 2, maybe 3 pools, and then you receive USDT on your wallet. And that's
Perfect.
basically the routing. And in that routing, there might be some kind of loss maybe that happens.
So in other words, it's more efficient. It's a more efficient way to trade the BSPT. Yeah.
Yes, for sure. It's more efficient because it's instant. Because
Isn't
it
there
gives you an instant.
non-efficiency in the
It
back
gives you
end?
an instant instant
Instant
result.
direct value without any spreads, without anything like that. Yeah. However, isn't
Yeah.
there on the back end of it additional non-efficiencies possible with the
Yes.
exchange of that point to any other token or asset?
Yes. Yes, of course. There's inefficiencies, and the efficiency or these inefficiencies can be obviously tackled. The more liquidity
Can I
there is
ask
for
another
point tokens.
question? Can I
Sure.
ask another question before you answer this?
Yeah.
So we said yes, there is or there's possibilities of inefficiency. The second
Yeah.
question here, before you continue on this, please, is if someone holds points tokens, can they swap it at any moment of time to BSPT from the protocol at any time with the same value?
Potentially they could.
Okay. Please now, if you can tell us about the inefficiencies that can exist on the back end of that.
So in the protocol itself, so when you're directly interacting BSPT to point tokens, there's no inefficiencies. There's, however, a dynamic rate system that's built in the contract that kind of adjusts the discount rates and the premiums based on a target portfolio composition for the protocol. And that part is governed by BST holders. Essentially, as BST will define the parameters of the protocol. So that's kind of BST as a governance token has direct impact and influence there. But from that point on, the swaps that happen through liquidity pools might have slippage. And that slippage might be due to insufficient liquidity. So if you are swapping, for instance, from point to BST, the liquidity is going to be probably the highest there, the most concentrated in that liquidity pool. But then you might have other liquidity pools where you have BST ETH or BST USDC, and those pools might have lower liquidity, and there might be some kind of inefficiencies happening there. So the router will establish these routes, and then based on your selected output currency, the efficiencies or inefficiencies, you will be able to compare them, right?
Perfect. So let me make sense now to two parties. One is the holder of real estate, me, an owner of a property. Let's talk about this for a second. But prior to this, let's talk about how does this serve our ecosystem and our community. Everyone within our community and our ecosystem, everyone who believes in Blocksquare, they attempt to change the future of real estate. Can you tell me this first, and then we reach the owner of real estate, and how would he benefit from that, and what does that mean to him, please?
So I believe the value proposition of Oceanpoint is quite clear. We're solving the liquidity issue. And the solution we're proposing here through the white paper is essentially to tackle illiquidity of real estate, the inherent illiquidity of tokenized real estate, which is still illiquid. And on the other side, make it closer to stablecoins. So there's a multi-phased approach that we have adopted here. In the first phase, it's a very simple functionality, which means, and the core goal of the first phase is to bootstrap liquidity for point tokens. So you'll be able to deposit selected stablecoins to receive point tokens. And then there will be a point to BST liquidity pool where you will be able to provide liquidity and earn BST rewards, just like the same mechanism as we have with ETH BST as a liquidity pool. So that's phase number one. It's like let's bootstrap liquidity around point tokens. Once we reach a certain level, then in phase two, we're gonna have the addition of BSPT tokens. So now in the composition, you're gonna have a majority part in stablecoins and then a small portion of value in tokenized real estate. And that's phase two. And then for phase 3, we're going to reverse the composition and trying to achieve much more exposure to tokenized real estate and less exposure of the protocol to just stablecoins. And that should create a revenue yielding protocol, because if you hold in your portfolio mostly real estate, then obviously the protocol generates revenues as well from those holdings, and those revenues fly into or flow into BST as a token. So that's kind of, to summarize, the strategy we have. What we would like from the community is really kind of go into the white paper, post on the forum, comments, doubts, maybe, adjustments, suggestions. So anything, because it's a community. Blocksquare is a community project. It's a DeFi DAO project where there's a lot of people contributing to it. And as such, we rely on those comments to make things work. But I believe that the team so far has done a great job in assembling the blueprint of how Oceanpoint can function. And you think yourself as the real estate person that you haven't had much influence, but you had great influence on how some of the mechanics of Oceanpoint, the liquidity engine, works, especially on the section on the dynamic rate system, where we basically then dynamically adjust the discounts and premiums and the taxation on stablecoins based on where we want to shift the portfolio composition. But it's essentially, it kind of mimics the logic that you, Makram, have as a real estate investor, which is
actually,
buy low, sell high.
What Dennis is saying in a way or another is, I'm the guy whom they hate, who comes up with those. Imagine somebody who's a dinosaur talking to people who are crypto native. Enough said. So you stimulate that afterwards, and discover what would a discussion usually end up with, and that's why fighting under the tree at that time. So, and by the way, we left Denis, we left him, we dropped him to his house probably or not, and then we went to our house, and we were both walking for more than 25 minutes and still fighting about it. So, what would it benefit a real estate owner? Me coming on, tokenizing my property, does it add another layer of benefit, of a reason to tokenize, or does it solve an issue that I had yesterday and wasn't sorted, and today it's sorted? I suspect that it should, because when you talk liquidity, you talk one of the biggest influencers on real estate in general, a non-liquid asset by nature. What do you think, Dennis?
If I go, I don't know, five years down the road from here, right? We've launched the liquidity engine. We bootstrapped the liquidity successfully. We bootstrapped in the composition of the portfolio, so that now we have a majority of like 80% of the total value locked in Oceanpoint is BSPT tokens of various sorts. Let's say there's 10,000 properties within it. Now, if you're a property owner, the solution here is that you basically can upload your property and receive liquidity for probably any amount you want to tokenize. But for sure, you're going to be able to liquidate instantly 20% of the value of any type of real estate up to maybe 5 million, right? So most of the real estate assets that people kind of find are kind of illiquid in most markets because they're not institutionalized in terms of investors. And on the other end, they're more like private investors that invest in these kind of properties are fairly illiquid because there's not a lot of buyers for the whole thing. And a lot of times you actually don't want to even sell it because, that's, you had a hard time acquiring it in the first place. And now it's stabilized, it produces the yield, but there's other opportunities around that maybe you want to take. So that's your solution, liquidating 20% of that asset or 30%. And for a property owner, I think that's a very, very interesting value proposition.
So the ability of letting go a part of your asset, liquidating a part of your asset in a way or other instantly. Again, that is if all ticks well and if the liquidity is available and so there is too many ifs, because again, as Dennis said, what we're doing here is we're trying to bootstrap the liquidity pools, trying to bootstrap value around that, so that it's the convertibility is as prompt as Dennis is describing today. However, the value that offers, if it well to real estate and to tokenized real estate, is a big worry from many of parties and stakeholders. If we get big real estate, billions of dollars of real estate on chain, is there enough liquidity to support it? I'm a believer that yes, if you have proper property, proper products, uh, efficiently tokenized assets, the right assets, without the fluctuating the values and overpricing assets and doing all of those gimmicks. So if people are doing things right, you should be able to have real estate, big real estate on chain, and you should be able to have liquidity for it. Now, again, it has never been tested because there's no $1 trillion of real estate today on chain, but hopefully soon there will be. This is what everyone is betting on. So obviously we're doing the same. And when that is there, bridging that liquidity gap and aggregating that liquidity would be of much value. Dennis, how did I do? Better than ChatGPT with those questions?
Definitely better than ChatGPT. I think it's.
I tried to simplify.
I think it was an interesting conversation. Maybe one thing that we did miss, and I know it's kind of an important question for our community, right? A lot of times it's like we get this question, and it's really well answered in the white paper. You know, why are we introducing point tokens, and why are we not simply using BST for the same thing, and so forth? The thing is, you can't use BST for this. It's not built for that type of functionality. BST is a crypto asset that fluctuates in price. It holds a lot of potential, and as such, it has a different kind of market mechanics, or what pricing, if you will. While on the other end, BST point tokens, they have this unlimited supply. There can be an unlimited market cap of point tokens. They can always be redeemed for BSPT or stablecoins. So, you know, the total value or total amount of point tokens issued is always reflecting the underlying BSPT and stablecoins. So basically, the protocol also kind of builds up over collateralization over time. But
I don't know how did I miss that part, but 100% very important. So tokenomics are different between BST and point tokens, yeah? And there will never be point tokens, as you said, with no value against them in real estate tokens, isn't it?
Exactly.
Yeah. So am I right to say here, correct me if I'm wrong, because remember, I'm the guy who hates crypto. Not, I can't say hate crypto, but I don't understand it. It's, to me, I don't understand it. So I can say I hate it. So I don't understand it. Here, it's something I understand. It's a BSPT, a property token, something that cash flows against a point token, isn't it?
Yeah, against. I mean, it's point tokens. You can always use them to get some property tokens, or you can use them to get some stable coins out of the protocol.
But the value on both, let's say here is all the points in the world, and here is all the BSPT locked in the protocol. They will be the same. They will match, yeah?
Yes, exactly. So they need to be balanced out.
So here is what we're talking about. I understand cash flow, okay? I don't understand everything else. I understand cash flow. And if you tell me BSPT cash flows, if it's a cash flowing asset, and you have in front of it a token that resembles that value, and there will never exist a point token that does not resemble a BSPT. Am I right? Yeah, or a dollar in BSPT. Yeah. if that's the case, then it's an immediate resemblance and correlation with real estate value and the cash flows. So to me, I'm not saying to you, I'm saying to me, it's better than gold because gold does not cash flow today. Does it make any sense?
Point tokens don't cash flow. That's the main thing.
Point tokens don't cash flow, but it's against
but the underlying BSPTs, they cash flow. And so as long as for the time when BSPTs are held in the protocol cash flows. But these cash flows that are accumulated. But the cash flows that are in that protocol, that cash flow flies into BST.
Yeah.
So point tokens, they don't cash. If you hold point tokens, they're essentially initially they're going to be.
Is point tokens convert?
Yes, they're always convertible into BSPT tokens or into stablecoins. That's always kind of this redeemability is always there, right?
Perfect. So this is what I'm saying. It doesn't cash flow as a token. However, your point token is convertible at any moment of time to a cash flowing token.
Exactly.
Or a stable coin.
Look, it's an aggregate state of the same thing, right? If you look at real estate and fiat, it's the same thing, but it's different, right? It's value, right? You can always convert real estate into fiat, and you can always convert fiat into real estate, right? But
with the exception that point tokens here there will never be an indefinite amount of point tokens against a limited number of real estate. The other way around, the limited value of real estate resembles, or on the other side, it's the same weight in point tokens, and that's the difference probably in the comparison between fiat and real estate. Yeah.
Exactly. So if you have in the portfolio, if we have 10 million of stable coins, and then we have 10 million of of tokenized real estate, it's the TVL is 20 million. The supply of tokens of point tokens will be 20 million.
Perfect.
That's it.
But let me ask you a question here. You opened questions for me again. So let me ask a question here, which is very interesting. So that point token resembles that property token, and you're saying that if there's this much property token, there will be this much value in point token against it. Let's say there is 1 million of BSPT. That million in BSPT dropped in value or fluctuated in value. How will that affect the point token value or exchangeability or supply?
Exactly. So that's the challenge we had to solve, and it's a big challenge because the asset value can devalue, right? Certain assets could devalue. In general, real estate is an asset class that does appreciate, but it also devalues, and it has its own cycles, right? Now, what we're doing is we've introduced this rate system. So whenever people transact with the protocol, there's discounts applied and premiums apply on asset pricing. So that spread kind of creates this over collateralization of the protocol over time. So in the example I made, there's going to be 10 million of stablecoins, 10 million worth of tokenized real estate. It's going to be 20 million points. Yes, that would be done in the same day. But because it's achieved over a period of time, the simulations that we've run basically show that there's a over collateralization that happens over time. That's number one. Number two, assets, real estate assets will never probably have a periodic revaluation that's faster than the frequency of 1 month. Currently, usually the appraisals are done every year, let's say. That's kind of the shortest interval that usually banks have, and then they have different automated models to reevaluate their portfolios on the fly. But those models work on a monthly basis because usually trading activity is reported monthly. It depends obviously on the system and jurisdiction. Maybe in Dubai you have a much faster live view, but in most jurisdictions around the world that's not the case.
Months, they do the initial valuation and then they do book valuation 3 months, or desk valuation every 3 months, which is similar. So yeah.
but in general, you can kind of monitor the activity of the real estate portfolio, and you can know in advance, like 6 months, 12 months in advance, where things are going to go. So it's not that volatile as crypto, where overnight, you have a 20% drop. It doesn't happen here. The
Even if it is
20% drop
volatile, you won't
happens.
feel it. Even if it dropped, you won't feel it. You wouldn't know about it. Exactly.
Exactly. So you're not feeling that, but you're able to measure it and have an outlook. So managing the risk factors of portfolio devaluation, it's also something that can be done upfront, and then you are able to use different parameters that are again governed by SBST holders to basically influence the parameters of the liquidity engine. And this kind of then de-risks the protocol from those situations. But ultimately, there's one fail-safe that we've implemented, and there's an explanation in the white paper, which we called 0.0. And it's basically a kind of mechanism to release some of the stablecoins that are in the protocol to buy back point tokens and burn them. So basically, getting the ratio and the over collateralization ratio back to a safe place. You need to remember that point tokens are always going to be also traded outside of the protocol. You might always redeem points for BSPTs, but point tokens might be traded below par. So maybe they're trading at 0.8, which is a 20% discount on what Oceanpoint as a protocol gives you. There's arbitrage opportunity here. But if the support of the price of point, that becomes more and more interesting for that kind of 0.0 mechanism to go and buy point tokens from the market and burn them, because then it reaches an over collateralization level that's much more safer. And doing this in an efficient way, managing this, it's basically the role of BST holders. That's why BST is definitely a different type of asset than point tokens, and they don't really compete against each other, but they work hand in hand in a similar way as you might, people who know MakerDAO as a protocol, and they have DAI is the stablecoin, but then you have MKR tokens, which are the governance tokens. And holders of MakerDAO tokens make the decisions on the protocol. Here, it's kind of a similar pairing.
We already crossed the time that we should, but I promise you it will be fast. Let me summarize and simplify what someone like me, would understand of this. As an owner of real estate, I tokenize real estate. Point tokens allow me an opportunity for instant liquidity. The protocol obviously is benefiting of that because I'm putting in cash flowing real estate tokens. I'm taking points and I'm utilizing that. Probably one of the reasons, probably there's many other reasons, but I can mention one now. Taking that point token and utilizing a convertibility element to get either fiat or stable coins and then fiat or any other crypto asset that is possible. Stop me, Dennis, where you see that I've gone wrong, please. So then, at the same time, the ecosystem is benefiting because when this is happening, the protocol is always purchasing, in other words, converting those BSPT to points at an edge to the protocol. In other words, at probably a discount to the value, and that is allowing the protocol to get stronger and stronger. The cash flow will partly be used to buy BST, and partly the other part probably will be used to buy point tokens and burn them so that that the balance stays at par or better. And here there is a benefit to everyone in the community, to the ecosystem, to the whole protocol, but there's also benefit to the real estate owner who would like sometimes, or who would want, or who would need to liquidate a part of the property tokens that he holds because he needs instant liquidity of some sort. even if at a small discount. At the same time, the protocol will decide how much will they buy. You cannot probably sell to the protocol 50% of an asset. There is to the risk management will kick in and will say that there will be only 5% of that asset purchased, and obviously there will be characteristics of the asset and the value and the cash flow that is put on the table. Am I right in describing all of this, Dennis, for everyone listening?
Yeah, I think you summarized it well. Definitely, like you mentioned, maybe one adjustment is most of the cash flows will go into that are generated through the BSPT holdings of the protocol will go into BST because they're used for reward distribution.
Okay.
But as you mentioned, there's this mechanism for achieving over collateralization. So kind of the governance over the protocol is always, do we prioritize reward distribution? So is it time to generate profits, right? Or is it time
Dennis, we
to
lost you here
strengthen?
for a second. We lost
Okay.
Dennis.
Am I
We lost
back?
you here for a second. If you can repeat the last two sentences.
Yeah.
Yeah. If you repeat the last two sentences.
Sure. So there's always this decision that the community will need to govern. Do we want to incentivize, money making for those who provide liquidity, or do we want to push forward the risking of the protocol by achieving more over collateralization? And so this is a decision that needs to be governed mainly. It's just like running any company or any fund in a way, right? Is it time to reinvest in the core business and make it stronger, or is it time to pay out dividends to investors?
Or
And it's kind of
repurchase
the same.
shares, maybe.
Exactly. So this is kind of the mechanisms, and they're all governed by BST. So essentially, if you hold BST, you hold the keys to the protocol. It's yours to govern. You can allocate your rights to vote on the decision making to delegate it, or you can directly influence it by being directly involved in the governance itself.
Guys, I hope that you were able to capture everything we've said, everything Dennis said, everything I've asked. You have a QR code on the screen today to access the white paper, understand more about it. The team is always available to support you with anything required. Trust me, the team is putting so much effort into putting things together the right way. And we're pleased to be producing in the good, in the bad, in the rough times, in the hype times, in the noise, when there's no noise, and where there's no one who wants to be involved in it even. So I believe that's a characteristic of a business and an ecosystem that is insisting on making a change and making a difference. Dennis, do you have any last words to our community?
I would say, I know it's a long white paper. It's more than 45 pages, I believe 47. There's quite a lot to unpack there, but education is key. So, take your time, read through it. And if you don't have time to read through it, there's a podcast that we generated with AI, and you can find it on the link here by scanning the QR code in the blog post that we published on YouTube, and it is interesting as well. It summarizes, I think, the whole white paper very effectively in 25 minutes. We've spent 50 minutes recording this block chat, so I think AI won.
Yeah, and by the way, I advise you to do that rather than take the white paper and putting it on Gemini, Chat GPT, and telling it, explain it to me. Because I believe the podcast explains it in a much better way and simplifies it and makes it more understandable, even for someone like me. So, thank you all for being with us today. Dennis, anything else you would like to add?
Take care.
No?
Thank you for watching.
Guys, happy to be with you today. I hope that we've added some value to your day, morning, evening. And until next time, thank you for sharing